I'm Adam DeSanctis, NAR Economic Issues Media Manager. I'm here with Dr. Lawrence Yoon, NAR's Chief Economist. Lawrence, we're talking housing 2016 expectations. A weak start to the stock market, some overseas weakness. What do we expect for housing and the economy in the U.S.?
It's not starting out in the right way. In fact, I'm more concerned about the manufacturing industry, where some reading imply that there could be some contraction, which means the other sectors of the economy need to pull up. But the overall, I think there is enough momentum, especially related to the home building sector, to at least avoid a recession here in the U.S. The overall measure of the economy, GDP, is probably going to rise very weakly, 1 to 1.5% in 2016. This is avoiding recession, enough to create jobs, maybe 1.5 million to 2 million jobs, but we have to recognize it is a subpar performance, well below the normal growth rate of 3% GDP growth historically.
Let's turn to housing. Existing home sales in 2015 up 7% from 2014. Will the trend continue in 2016?
Because of the downgrade in the economic activity, that housing market may struggle to gain in 2016 regarding home sales. Last year was a good year with 7% growth in existing home sales. This year we may only squeak out 1 to 3% growth in home sales. Because slower pace of economic expansion, rising mortgage rates, but nonetheless, it is a job-creating environment, and there's still a large pent-up demand for home buying. Therefore, I think the home sales will squeak out a modest gain in 2016.
And let's talk about prices. Prices up around 6% last year. What do we expect in 2016?
The home prices will also moderate because the demand is moderating, but the home price projection of 4 to 5% will still outpace people's income by a large amount. People's incomes are only rising at 2%, maybe 3% in 2016, but home values will rise 4 to 5%. And the growth in home prices are coming due to the fact that we will again encounter housing shortage in many markets. Why do we have this housing shortage? Because the home builders have been underproducing for multiple years. If one looks back from 2008 to 2014, it was less than 1 million or touching 1 million. I mean, this is well below 1.5 million that is needed to keep up with the growing population here in the U.S. So the cumulative impact of the underperformance by home builders for multiple years is the reason why there is a housing shortage. And once the spring home buying season returns, we will begin to feel that.
The Federal Reserve in December raised short-term rates for the first time in many years, with more expected in 2016. What will that mean for mortgage rates and buyers?
So there will be little bounces here and there. Anytime there is a stock market adjustment, sometimes the mortgage rate could actually go down briefly. But given that the Federal Reserve will be raising rates more throughout 2016 and possibly going into 2017 as well, general consumers should anticipate that the mortgage rate will be somewhat higher. Last year was a very attractive rate of about 3.8% annual average. This year we may go up to 4.5%, but by any historical analogy, this is still very attractive for home buyers. It is a bit higher compared to last year, so people should anticipate. And also, just a quick rule of thumb, 1 percentage point rise in mortgage rate translates into about 10% reduction in buying power. So that's something the realtors and the consumers should plan for.
First-time buyer share is near 30-year lows. Is 2016 the year we see first-time buyers back into the market?
I believe so. With consistent job gains, that this is improving the overall finances for everyone, even though it's a moderate gain. So I believe that first-time buyers will steadily reach the market. Our recent NAR survey of renters, what is their aspiration concerning home ownership, surprisingly, at least for me, I didn't expect the numbers to be that large, but over 90% of renters believe that home ownership is part of their American dream, something they want to realize at some point in their life. Maybe they cannot do it this year, but that's their aspiration. But now that the economy has been generating jobs for more than 5 years, I think we should see some modest upturn in first-time buyers. We will not be back to normal in terms of the millennial first-time buyer participation in the market, but the worst, I believe, is over.
Now, which parts of the country should we expect home sales to remain stronger than others?
There are many variables that would impact the local housing market, the local housing supply, the local zoning issues. But one data that I always look at is the local job market conditions. Areas where there's a strong job growth, there will be a stronger housing demand. And areas where there are job losses, obviously there will be fewer home buying activity. So jobs, as common sense would dictate, is a very good leading indicator about the local housing market condition. And based on the numbers through end of last year, this is suggesting that markets like Salt Lake City should do well, Portland, Oregon should do well, Riverside, California. In the south, Atlanta, Tampa, as well as Charlotte looks to do very well. And there are a couple of surprises. One in the Midwest, Grand Rapids are likely to outperform the nation, as well as Providence, just from the fact that Boston has become very expensive. People may be searching for a home in Providence and commute over to Boston. That could be a possibility. As to the downside, it's all related to the energy prices. The states that is focused on producing energy, whether oil or coal, they are losing jobs. So West Virginia, North Dakota, Louisiana, Oklahoma, they may see overall fewer jobs in 2016 compared to last year, which means slight slackening off in the home buying demand.